Hello, this is Aaron Rosen, your local realtor in Northern California. Today I just wanted to share an article with you that I thought was interesting and kind of indicative of the market as a whole. Fannie Mae and Freddie Mac set to tighten CRE loan rules again. Just for a little context, Fannie Mae and Freddie Mac are basically in charge of the secondary mortgage market. There are two types of loans. There's what's called a conforming and a non-conforming loan. Banks generally aren't interested in holding your mortgage until the life of the entire terms. They would prefer to sell it to someone else and then get their money so they can continue to reissue loans. That's just where they make the most money. So they're incentivized to do that. But in order to do that, they have to conform to the requirements of it before it can be sold into the secondary mortgage market. That was part of the issue for the 2008 financial crisis, is that there was subprime loans and that can cascade down the effects. When those get downgraded, then they're worth less and investors have less money. So basically, they are trying to prevent that from happening again. Banks, certain banks in specific, are very leveraged towards commercial real estate. So that's where they're starting here. Fannie Mae and Freddie Mac are working on newer and even stricter rules for commercial lenders and brokers after recent mortgage fraud schemes came to light. I did a video not too long ago that there was over $450 million worth of real estate fraud, and that can come in many forms. In just over here in Sonoma County, there was someone who bought up 122 houses and then stopped making payments on it. And basically they found out that their intent is to defraud a bunch of those investors, and now those houses are being auctioned off. The changes come after Freddie announced the new guidelines earlier this year. Expect a wide net to be cast, as the latest flurry of real estate schemes have involved everything from doctored income statements to fake property sales and bloated prices. Among the new requirements, lenders would have to independently verify borrowers' financial information to make sure they have enough cash and verify their income. So right now, the way that it works is you just need bank statements. Like, you can print these out from your bank basically and give them to your lender. And of course, people are going to lie and people are going to cheat at this. So there's a lot of different ways that people try to scam people in real estate. And basically, they're going to be cracking down on a lot of this. And, so commercial prices have come down a lot. And this is probably a step to protect those prices and people trying to scheme in the flurry of people trying to get this commercial real estate that is cheap. What I find interesting about this is usually the commercial real estate sector leads the residential sector. So I'm expecting these types of rules to continue coming into the market for buyers like you and me. And this is an interesting development, because I hear from a lot. I hear from my clients, I hear from analysts, I hear from a ton of comments on my channel. People are waiting for housing prices to come down. But generally, housing prices and interest. But generally, the government, the Federal Reserve to be specific, lowers interest rates when there's some sort of economic catastrophe like a recession. And now banks are going to have more stringent requirements, and during an economic recession they have less cash and the ability to lend. So what this is really going to do is it's going to make it even more advantageous for people with cash as opposed to people who are getting loans in the real estate market. Everybody's waiting for everything to crash to the bottom, but what you really have to think about is, am I even going to be able to get a loan when things are the cheapest? That's a huge question. There's a debate. I saw an article where they said, housing prices are going to come down 80%. Well, I'll tell you what, unless you have cash, I can almost guarantee it's going to be extremely hard to get a loan when housing prices come down 80%, because there will be blood in the streets. There'll be bank failures. There'll be bank mergers, all of that type of stuff. So if you would like to have a better understanding of this or do a personal consultation, all of my information is below. Feel free to reach out. And good luck with your housing adventures.